Hello. Welcome to video 3. Here we're going to talk about these parts here. These debits, credit parts, please. I know some of you, if you see this, you'll be scared. Some of you, when you are studying accounting, the way that you were taught, maybe they didn't teach you well. So whenever you see this too, you get annoyed and scared. Like, these are the kind of thing where they pursue me away from this kind of course. I don't understand this. You won't get it. But what I'm here to do is to make sure that you get it by force, by fire. And we need help. If you still don't understand when I explain, just send me a DM. Can have a phone call. I'll make sure that you get it. Trust me, it's not hard. A lot of people think it's hard, but it's not. So that's what we're going to work on. So now, like I said before, we are preparing for 4 reports, right? 3 out of the 4 is that you submit to your Oga, but those 3 would get the information that they need for it to be completed from the first one, and that first one is called trial balance. You need to prepare the trial balance first before the other 3 is prepared completely. Okay, and now to prepare the trial balance, you need to do 2 things. You need to record your activities, your financial activities. Okay. The way you record your financial activities is by doing journal entries. Another word for journal entries is called double entry, but I prefer to call it journal entry. Okay. That's what I'm going to be doing in this video for now. When you do the journal entry, when you record your journal entry, you need to check your GL accounts, general ledger accounts. That's the second one you do. Okay. So now, 1, journal entries. 2, general ledger accounts, aka GL account. Okay. So now, assets, expenses, dividend, liability, revenue, equities, right? These are called accounts. These are like account functions or account types. Current assets and non-current, all of that, right? But they're called account type, and they are being represented by GL accounts. There are things you open an account called GL accounts. Okay. These accounts, let's call it GL accounts. These GL accounts they are not bank accounts. So when you hear GL accounts, don't think bank accounts. They are not bank accounts, right? And they are not sales accounts. When you are doing sales, some people will say, I need you to go and work on that account. No, this is not a sales account. These are GL accounts. So whenever you want to do a journal entry, you are working with GL accounts. If you don't have the specific GL account that you need to do a journal entry on, you will open one. Okay. When you open one, you name it the name of the account, and then you give it its account type, any one of these. Okay. For example, the example we are going to do now, right? Or I can just say, maybe for example, if you paid for fuel, let's say your finance manager where you work for now said, oh yeah, please, I just paid for fuel. I use the Providus account to pay for fuel. I paid for 50k. Go and record it in the cash book or the financial system. Okay. You will open, the first thing you do is open an account if it's not already there. You open a GL account, you rename it fuel. How do you pronounce fuel? Is it fuel? Fuel, yeah, fuel, fuel, whatever. Please allow me. Fuel, right? You name it fuel, or is that diesel? Let's say diesel. You name it diesel, right? And then you give it the type of account it is. In this case, it is an expense account, which is just an expense account. Okay, name it as it's an expense account. It's a admin and operations expense account. Okay, and then you work with that. So now let's start recording. Okay. All right. So you have just been recruited as an accountant for a company that sells AC. Okay. They've not started any activity yet. They have not started selling. They don't even have the AC to sell yet. They just have money. They don't have the money. And they open a bank account, maybe Providus, right? And the owners, the CEO, his father, everybody just has money. They just put the money in the bank. They sent it, do transfer to the company bank account, right? That's all for now. You go to your finance manager and you tell him, oh yeah, I need to start recording everything from beginning to now. Okay, maybe the company started in February. You need to start recording everything. The finance manager then sends you the bank statement. Let's see. Let me give you an example of a bank statement. You see, this is one. So this is one. This is what your finance manager gives you, and you need to start recording them. Okay. So now, this part where you see debit and credit here, this is a bank statement. Money that comes in is credit. Money that goes out is debit. This is for banks. Okay. But in accounting, you have to mirror it. Okay. I know, like for example, when you see where is this thing? When you see alert that comes in, maybe if you buy airtime, you see alert, you see debit, it means money has left your account. But when somebody sends you money, you see credit, the amount when the alert comes in, meaning your money has increased in your bank account. But when you're doing accounting as an accountant, when you're doing the recording, it is the opposite. Okay. When money comes into the company's account, let's say for example now, a bank account, cash, petty cash, whatever, it's a current asset. As you can see, debit, credit here. If money comes in your company's account, the way you record it for the cash is you debit the cash account. But if the money leaves the account, you credit the cash account. Cash account, aka bank account, whatever, it's your cash, right? So that's what we'll do for this part. Okay. So now, like I said, you mirror the bank statements, and this is the bank statement. As you can see, credit, debit, meaning credit, money has come in, this is how much, this is the balance, this is how much the company has right now. And you ask your finance manager, what are these? You need to identify them. You don't know what they are, so you then tell you, oh, all of them are contribution from shareholders of the company. This one is the CEO's contribution. Is him that sent this 10 million into the company's bank account from his own personal account. This one is from his father, Mr. Rotimi Daniel. This one is from his brother, Toyosi Daniel. This one is from his best friend, Benjamin, 5 million. And this one is from a random investor on investment company. I just wants to invest. Total is 50 million. So you need to start identifying. This is where you identify, okay, as an accountant. How do you identify? Like you said, you have already known what all this one and your finance manager has told you. So what you do here is this. You will type here accounts, and you type here type of account type, or just write type, okay, and then you type here record, and then maybe GL code or GR code, okay. Right, so these are the things you'll be using to identify. So the first one, what do you say it is? Money from also you can write here, let's write something here, notes or comments, just to give more comments on the particular transaction, okay. So first one, owner's contribution or deposit for shares, okay. That's what you name the GL account. That's what you name the GL account. Right? And the type of this type of account is what is an equity. Okay, you type equity here. And note, what is it? Let me, sorry. Is it sorry guys, just trying to put this together. Okay, note. Okay, so you put note here. You put a note here. Your boss said that this was from the CEO himself. Contribution owners, you can write owners contribution from CEO, okay. This part, no, leave it yet, just leave it. What is this? Okay, drag this here like this. um this part came with the bank statement, so just ignore this. In this part, in the bank statement, you will see numbers, but this is a dummy bank statement, so ignore this. Right. Okay, so now the next one, do the same. Everything is deposit for shares and it's equity. So he said this one is from the father, Abi. Owner's contribution from CEO's father. Okay, the next one from CEO's brother. The next one from CEO's friend. And the next one from owner's contribution from gym class investment limited. Okay, so that is identification done for this first part. Okay, now you need to go and record them. Now you have identified each one of them. You need to go and record them. And how do we do that? You go to the journal entry part. Let's do some journal entries. This part is going to be exciting, so let's do it. This is it. This is the part of journal entries. JE, or you can call it JR. Okay, so like I said, you need to open the accounts, the GL accounts for each one of those two. When you're doing an journal entry and you're recording, it's also called double entry. So there are two accounts that you need to open that you're going to work with, either two or more than two. It cannot be one. Okay, it definitely cannot be one. So the first one we're going to open, when you want to open an account in accounting software or ERP, you go to somewhere called chart of accounts. As here it's called COA, meaning chart of accounts, where it shows all the GL accounts that you have already opened. Okay, and when you open them, it gives the system will give the account a particular code. Okay, depending on what type of account it is. So I've done something here. If I want to code every account, like for example, if I'm coding a current assets account, it's a 8-digit number that starts with 1. If I'm opening a fixed assets account, GL account, it will start with 2. Current liability account, it starts with 3, goes on like that. So the first one we're going to open is the current assets, cash, right? We got cash, so we need to do cash, and the second one I will open is equity. So cash, now you can either name it cash, the GL account, you can either name it cash, but in this case we are approaching this as if we are in an office. Okay, in an office they don't just call it cash, except maybe if the cash is in hand, maybe have the cash physically in hand, you have it in your pocket or in a safe, where you can just open the safe and just bring out cash, or the bond, that's that one is that one. But if it's not that, if it's in bank accounts, right, you cannot just write cash. You need to name the GL account, the name, the beneficiary name, the bank name and stuff, just to identify the particular bank account that the money is in. Okay, so let's not call this cash, let's call it's a Providus account. So you say Providus Bank, and then the beneficiary name or the account. What's the beneficiary name? What was it? Purchase account. That's it. Beneficiary name is purchase account. Purchase account. And then you also put the bank account number, just for extra identification of the particular account. Okay, and 3. So now the code, like I said before, it's a current asset, right? You put current asset here. This one you need to put this one here. Also put current asset here. Current assets. Okay. Here you need to put, now type the code. We are working manually. This is not an ERP or accounting system, so this is Excel, so we work manually. In the GL account here, you need to put the code next to it here. See, just put the code next to it, and the name of the GL account will now be here alone without the code. But under the GL name, put the code, and then put the code separately from it. Okay. Now we have opened a GL. This is our first GL account to work with. Our second GL account that we're going to work with is the equity, right? First put that one there, and then what's the code? Every equity account, GL account, every equity GL account starts with 5. Every equity GL account code starts with 5. So 5. Okay, bring the code here, and then we name the account. We're going to name it deposit for shares. Yes. And bring the name of the GL account, bring it here, so it will be on its own. We have opened 2 accounts now. Okay, so we can now do the journal entry. So here we go. So this is how you can do it. First, there are 2 ways to make it faster. You can either do this, just add everything up. What am I doing? That's the balance part of it's here. Add everything up from here to here. This one is 0. This one is 0. We haven't spent anything yet, and this one is 50 million. You have it's shown here already, but just to verify, you add everything together. So the first way you can decide to do it to make things faster Why is this thing like this now? To make things faster, you can just use 50 million, right? Let's do 50 million. Type 50 million and just do it all at once, or you can do it one by one. First start with 10 million, next go with 15 million, then the 4 million, 5 million, all of that, you know. But for time, we'll just do the 50 million as everything comes in the same date. But if they did not come in the same date, let's say the first one, this 10 million, came 25th of February as it is, and the next one is 26th of February, the next one is 27th, the next one is 30th. You need to do them separate because they are two different dates. But if all of them came in the same day, you might as well just add everything together and just do 50. Okay. Alright. So you start with the date. Nope. Always start with the date whenever you're doing journal entry. Always start with the date. Now that date is 25th of February. So remember, it's a double entry. So and that. And I always give my journal entry a code. So this code, I can just say JR equity bank BA1 26 02001. It's a long code, but we can reduce. Let's leave it like that. Put that one here too. Thank you. We also have reference. Can give you the reference. Remember here in the bank statements, there was like a document number where I hid. Where is it? Document number. So in a real bank statement, you see some numbers here that identifies each transaction. You can be putting those ones here as reference. Reference is just something to help you find everything faster. If you are working in a company, journal entries is going to be a lot of massive data. A lot of it will be here. This one is empty because we're just starting. But normally when you enter a company, it's plenty, a lot of journal entries passed. So maybe if you want to find something, you use the reference to find it. So to help you to find, but let's ignore reference for now. We can write a description. Just write owners okay, and next, so when you're doing the journal entry, the first part is what you would debit, and then the second part is what you would credit. So let's go back to this part here. In this case, we are working with current assets, which is the cash, the bank account, and we are working with equity. Like I said before, with debit and credit, this is where we're going to explain this part. So in this case now, money comes in into our bank account. So the cash that we have has increased. So as you can see, up, the arrow is going up, meaning we'll debit it. But if it reduces, if the cash that we currently have reduces, meaning we paid for something, maybe an expense, we will credit it. But in this case, it went high, so we debit it. Okay, so let's quickly do that. So here it is. We'll put account. As you can see, okay, and then the second one is the equity deposit for shares. See, the two of them has come out. There's this formula I put here that will bring the both of them out. Okay, so let's start with the current asset part. So it debits, we debit it instead of credit. We write 50 million. Okay, 50 million. Meaning money has come into the account and 50 million has come into the account. So we debit it. In the second part, it's an equity, right? So the equity account now, the equity GL account, if we receive money, it becomes an equity, and the equity account will then increase. The money in the account has increased, right? So in this part, as you can see, the arrow here is facing up, meaning it is going higher. The arrow here is facing down, meaning it is reducing. In this case, the arrow should be facing up because the money we received money has increased. Okay, so we credit it. All right, so we credit it. Put the 50 million here under credit. That is it. That's your first journal entry done. Journal entry done. Okay. The bank statement, this bank statement part is not needed, but you can just put it there. You can just be writing, maybe for this part now, you just write 50 million here. That's what is showing in the bank account right now. But always make sure it is next to a cash account that you are recording for. You cannot put it next, you can't put it here again, next to a equity or any other thing. Always a cash, anything to do with cash, that's where you put it there. But if it's the one where we paid money, we spent money, meaning money reduced, you will put minus 50 million here. See, but in this case, money came in, so there's no minus here, so it will just be this. Okay, but now let's just ignore this for now. The purpose of this is just to help with reconciling what is in the bank account and what we have in our cash book, aka finance management system, which is something which is this Excel. So yeah, but let's ignore this for now. So we have done the recording. Okay, can give a comment here, but it's not needed because we're already given a description here. If you have any extra things to write, just give a comment here. This part, don't worry, we'll get to that one later. Now you need to go back to your bank statements, right? You have recorded all these ones. Now you need to go and, as you have written the notes here, you need to go here and type record. You can just write done for all of them, right? And then you can give them the GL code just for finding sake. You want to find them. and then you save it. You're done. You save it. Done. That's journal entry done. Okay, let's stop for now. In the next video, we'll see how this journal entry moves towards our report. Okay, where we'll check the GL account, the trial balance, and then we'll go to our reports, the income statement, balance sheets, and the cash flow. We'll see how this journal entry is showing in all of them. All right, thank you.